Welcome back to the Crypto Power Hour, the #1 crypto show on Rumble, of course, powered by our friends over at Solum Global with your hosts, Lance Migliaccio and George Ballantine. We're the Crypto Bros, and this is your ultimate deep dive into everything crypto, blockchain, and decentralized finance. And we don't care whether you're a seasoned investor or a newbie just stepping into the world of digital assets for the very first time. We're going to bring you expert insights, top interviews, exciting new projects, breaking news, and game-changing innovation shaping the future of digital finance. Because, of course, on this show, in crypto, we trust. George, my crypto bro.
What's up, man? What's up?
What's up?
I don't know. It's Wednesday morning. Oh, it's hump day. Or for the single guys like me, it's hump week, but whatever.
What's going on? What's up? How's the weather over there in NYC, brother?
Yeah, it's all right. It's getting warmer than, it was raining the last couple of days.
Probably need it, man. We had a dry winter here in Colorado. We need some rain or some snow or something, honestly. And I'm not calling for it because I don't feel like doing any shoveling, but I don't know what the summer's going to be like because it is just dry here.
Yeah.
Dry, And it's one of those things. Now, if you're joining us for the first time, you know the drill. Hit that follow button, hit a like, give us a comment in the chat, join the chat, do whatever. It's 7 a.m., but we want to hear from you. Want to know what you guys are thinking, what's going, what's crack-a-lacking, whatever's up. And, of course, if you'd like to sponsor the show, info@thebigmig.com. You can hit us up direct. In the meantime, let's give a shout-out to one of our sponsors. They've been with us the longest. Why? Because George and I are not only crypto guys, we're also gold guys, and this is the solution that you might be looking for. The 62.2-gram prepper bar, perforated off a small piece to make a payment. Easy peasy, Japanesey. It's here for you when you need it, and here's the deal. Doesn't matter whether it's for asset protection from inflation, diversification, or economic turmoil, or in the case of the prepper bar, it's very unique utility for barter and trade. It's a perfect gift for everybody. It's a perfect thing to have in your sock drawer, your gun safe, your regular safe, safety deposit box, just in case your U.S. dollar tanks, just in case, credit cards aren't working. You can use the prepper bar, especially at these prices, very easy to use. And here's the deal. Yeah, it comes with an assay report. You don't have to worry about any counterfeit gold coming out of the guys over at Genesis Gold Group. Very easy and guaranteed good bullion, good tender. You're not going to find it on eBay, that's for sure, because lots of fake stuff on eBay. Be careful over there. Head over to thebigmigbar.com. That's right, thebigmigbar.com. Use, you can use the name, The Big Mig. Head over there, let them know you're from the show. Call them up at 888-526-7154, 888-526-7154, or go directly to the website there with the QR code. George makes it easy. Head there after the show, not now. Head over to thebigmigbar.com.
Break me off a piece of that prepper bar.
Boom. Hey, did you get your swag delivery in, George?
No.
That is so weird.
Oh,
very strange. I would have thought.
Not worried about it.
Yeah,
figure it out.
I always wonder. I thought,
what I'm worried about?
What are you worried about?
If people are securing their crypto and storing it the right way, that's what we should be worried about right now.
Yeah, no doubt. At the end of the day, a lot of people make mistakes when it comes to that. You got to really be careful. Everybody wants to get into a crypto wallet. They want to steal whatever they can. There's lots of people out there actively looking for crypto wallets that are open. Ways to steal your crypto, of course. So today's show, the education piece, how to store your crypto safely, right? How do you do it safely? And what is crypto custody? So let's get right into there. So, of course, you guys have heard the word. You've heard about custody, right? That's the state of being under control. That's the guardianship or the protection of your crypto assets, your tokens, your meme coins, if you're worried about losing those. Of course, cryptocurrency is going to refer to the method you use to protect cryptocurrency. Whether you're storing the private keys associated with a cryptocurrency wallet. And of course, there are lots of ways to do custody. And each one of them, of course, they have benefits, and there's going to be trade-offs because, each one of them is kind of a different setup. You could be talking about, cold storage, an example. And whenever you use independent or third parties, online or offline options, you have to think about what are you giving up? You're going to use one for the other. Some of that's convenience you might give up. but then you're going to be safer. And of course, there's lots of ways to secure those digital assets. And in the world of traditional finance, regular banking, your mortgage account, your brokerage accounts, custody is going to refer to the services offered by the banks or the financial institutions, of course, that manage and protect your cash or your securities. Now, financial custodians, they're always going to try to help safeguard investments. Of course, with quantum computing coming on board, you're going to have to worry that whether or not those systems are still going to work. There's a lot of discussions in the financial arena about that. And in the case of these financial custodians, of course, they're mediate your transactions a lot of times. And they're going to make sure your tax earnings are going to be properly reported. You're going to get those reports you can download and give them to your accountant. Maybe now you're going to use AI to do your taxes. A lot of people are saying they're going to get rid of their accountant because they've taken their tax returns, pumped them in, and found out that AI can do a better job. So when you're thinking about the digital asset industry, you're going to have to think about all these different methods, and there's a lot to filter here. And that's why George thought it'd be important for us to do this. And, you can do it independently, as an individual. You can do it with the help of others. Or it can be managed entirely by a professional third-party service. A lot of the big brokerage houses are getting involved, and they are coming, mainstream with crypto because regulation's getting mainstream. So, of course, that's going to change a lot. And one of the big questions is always, what do your private keys have to do with custody? What are the private keys? And we talked about it on the show that you've got your public username, not your public, but your username and your password to get into your account. But then you've got your seed phrases, right? And you've got these private keys that you need to be aware of. And so unlike a wallet that stores your cash, your crypto wallet doesn't actually store your cryptocurrency. Instead, your crypto lives, permanently on the blockchain. So your crypto wallet or the custodial wallet associated with your crypto investing, whatever platform you're on, that is actually storing your set of private keys in there. And they are the alphanumeric code used in cryptography that functions in a similar way to passwords. So there are both public and private keys. And these are these long string of letters and numbers which help you prove ownership of funds held in a crypto wallet. You can think of your public keys as a bank account number or username, which you can share with anyone. So, that's when you're going to transfer crypto, your public key is what you're going to share with people. Or if you're going to send crypto, that's all part of it. But of course, the private keys are a completely different kettle of fish. They're similar to like a PIN number or a password. Your private keys are what ultimately allow you to gain access to your funds. And because of this, your private keys, and let me say this slowly, should never be shared. Some people, George, and I think you've seen this online, some people have done some dumb things where they're like trying to show off their crypto account to somebody, or like they're on a Zoom call and their computer is up, the screen is up behind them, and their private keys are up on the screen for everybody to take a nice screen capture of and give them access. There have been some instances already of people doing some dumbass things, and they go back into their crypto wallet and wham, bam, thank you, ma'am. It's all gone.
Yep. It's happened. You see it a lot with younger kids trying to show off, showboat.
Yeah. Yeah.
Egos.
Well, and some people have done it accidentally. There was a guy that did it on a Skype or a Zoom call. And he was unlucky that somebody took a snapshot. I don't know if they ever got to the bottom, but they emptied his wallet. And he had about $760,000 in it. So pretty ugly. So private keys are going to serve, this is your means of digital signing transactions, of course, and all permitting the transactions. So that digital signature, that broadcasts your ownership of a crypto asset to the blockchain network, and without revealing the details of your private keys themselves. So as long as your private keys are secure, your crypto is safe. This is going to be ultimately the way you choose to secure your private keys, which defines your custody method. And how I think we got to explain hot and cold wallets, George. I think we ought to stop right here. Let's go into the hot and cold wallet thing, because somebody I saw online, they're like, "What the hell is a cold wallet? I don't understand this." People are struggling.
Cold wallet it's like 20 degrees. That's what
yeah, that's right. Celsius.
Nah, I'm just kidding.
Celsius. Are we using metric Celsius or Fahrenheit?
Fahrenheit. So, I mean, look, between the two, they're generally, in general, they're both solutions for securing your private keys. And you can actually split it. You can put it into different categories. 2, hot and cold storage. Now, no matter which custody agreement you choose, your private keys will be held in one or both of these wallet types. And it's very important. Like Lance was just saying, do not, I repeat, do not give out your private keys. Keep them safe. So let's go. We'll start off with hot storage, Lance. Let me do hot storage.
And
first.
let me say one thing. I just want to say this one thing to the audience.
No.
Let's say that you're sharing custody. Some people have a deal where they're sharing the custody because they want some other people to have access in case something happens to them. You better make sure you set the groundwork with your children, your wife, or your significant other, whatever it is. Make sure they understand the rules are that private key. You got to keep that shit under lock and key. So that also heard some stories about people that they were sharing custody with a loved one or a significant other, and the other one just didn't really understand what they had and made the mistake of sharing the private key.
Yeah, so don't do it. So let's go. We'll talk about hot storage, right? What it is, it's actually just plain and simple self-custody solution that actually remains connected to the internet. Now, just remember that statement. Hot remains connected to the internet. Now, these software wallets, they'll allow you to make online transactions, even interact with various exchange platforms and decentralized applications. Remember this. Hot storage remains connected to the internet. That's a big statement, and I'm going to get to that later. Why? Just remember this. Now, because they're connected to the internet, hot wallets may be more susceptible to hacking attempts than their cold storage counterparts. Why? Because they're connected to the internet. They may also have their access limited by, depends where you're at, geographical locations, because let's face some exchanges where their wallets, they're not legal or not permitted in other countries, and vice versa. Some are not permitted in this country. So you have to be careful. Some will say, "Oh, get a VPN and change your IP address." Yeah, I mean you could, but you're still taking a chance if you ever get busted. If they ever find out. So just be careful with that. Now your cold storage, it's solutions that keep your private keys entirely offline and are generally considered the safest way to store your crypto assets. Now, when you're doing a transaction with your cold wallet, you're signed on locally, which makes them much less susceptible to hacks. I'm having a bad morning this morning. I don't know why. Hardware wallets.
Tongue-tied.
Hardware wallets are a cold storage solution that are available to consumers who wish to take, I like this part, full ownership of their crypto. Full ownership. Many crypto investing platforms also keep their customer assets in cold storage to increase the security of their platform. Now, if you look, bottom line, the protection of your private keys is defined by your custody arrangement and your storage options. So you have a choice. You have 2 routes. It's up to you. You have the choice between your options. Well, it'll depend on you, your tolerance for risk, security, and the level of responsibility you're willing to accept. Because let me tell you, if you lose them keys, you lose that wallet. You're never getting in. Now we have to look at all right, well, there's different types of crypto custody. There's self-custody. The word self, get it? Many feel like people look, crypto and blockchain technology empower people with a deep level of financial independence, right? Think about that. Cryptocurrencies like Bitcoin are decentralized and not controlled by government, company, or other intermediary. So what does that say? What is that telling you? A person owns crypto. They can maintain complete control over how they choose to keep that asset. And it's not only Bitcoin, it's the other cryptos too. I just said Bitcoin just because everybody knows Bitcoin. So when
Everybody, it's funny. We all default to Bitcoin. Isn't that horrible?
Yeah, I mean, so everybody knows it's the most popular one. So when you have a third party crypto custodian, I don't know, if an exchange holds your private keys, they're the ones that are ultimately responsible for controlling your crypto, not you. They are. Now, these institutions are in control of your crypto. Your assets may be subject to regulatory restrictions, or you could even be at risk of theft. Now, there's security breaches that have happened with exchanges, all due to the human error over there. Somebody doing something either by mistake or getting an email. It does happen. So you're leaving it up to them. If you want full control, you can take it offline, maybe. Cold storage. And if you ever have that wallet, always put it in a Faraday bag, which will block any transmissions, Bluetooth, Wi-Fi, anything. It's just another security thing. Now, Lance, they're talking about when you have your wallet on exchange, they're saying this actually led to this creation of the popular expression, not your keys, not your coins. Now, this continues to be the mantra in the crypto self-custody movement. So think about it. If you're not holding the keys, and they are, they're just saying, not your keys, not your crypto, not your coins. Could be. I mean, really your coins, but they have control of it. If you want control of it, don't put it in a hot wallet. Put it in cold storage. God, my phone's been going off this morning. I don't know why. So when you take full custody of your own private keys, know that only you control your assets. This is one big level. You have complete control and responsibility. So if you're not a responsible person, maybe you shouldn't do it. Because I've seen a lot of people that become irresponsible. They just throw stuff around. We can say there's a guy in UK left his wallet, his crypto wallet out on the counter. It got accidentally thrown in the garbage. Now it's in a big landfill. It's got like, I don't know how many millions of Bitcoin in it. Lance knows the number on that one. I keep forgetting that one. So, that's a big responsibility.
Yeah, right now, I don't know it because the value is going down. It was worth $750 million at one point.
Yeah. So, I mean, look. Think of it as like you go to a bank, you give your money to the bank, right? The bank's holding your money. They're taking responsibility for it. Or when you take your money, put it in, safe somewhere hidden in your house. You're taking control of it. Almost like the same thing in essence. Something like that. Except you need these private keys. All depends about your security, responsibility. Now, there's a thing, Lance. They say, I heard a thing. There's a little thing. They say partial custody. And like when I heard that word partial, what the hell is partial custody? It's a solution that splits the responsibility of securing your private keys between multiple parties. You can do it. This custody method is all useful. It's actually, they say useful for maintaining joint accounts where multiple individuals have access to the same cryptocurrency.
Do you know one of the reasons they came up with this? Partial custody, George?
So if there's multiple people, no one can just wipe it out.
Well,
I guess.
That also, but this originated, at least what I read about it, is because of the kidnappings. They didn't want this hostage thing where somebody takes you and wants to force you to give up your private keys and force to give up your seed phrases. They decided that splitting the data might be beneficial. So this is kind of one of the solutions they came up with. I'm sure that they didn't solely come up with for only that reason. But my understanding, that's one of the reasons that compelled some of them, because of course, we've heard the stories about people getting snatched up.
I have a better solution.
What's that?
I have a better solution. Don't tell nobody how much crypto or what crypto you got.
Exactly.
And you won't have to worry about somebody trying to kidnap you or take your wallet. Because ain't nobody going to know except you. I mean, come on, people.
Hey, listen, look what happened to Lick. Lick might have gotten away with that theft of his crypto from the U.S. Marshal Service when he was out there balling.
Yeah. Showing
everybody the kind of crypto he had. And of course, the people started to get suspicious because he didn't seem to really know what he was talking about.
Yep.
Listen, I agree with you. You don't see billionaires rolling around trying to show everybody how much money they've got. Forbes does that, not the people themselves.
All right, so there's actually, for partial custody, there's actually two solutions they give you that are available. One is a multi-signature, and they say the acronym, if I say multi-sig, you'll know it's multi-signature if Lance says it. And then you got secure multi-party computation, which is MPC technologies. I mean, there's so many acronyms in Bitcoin. So what is multi-signature, multi-sig? It's in standard cryptography. It's a signature that is created by one individual or an entity. And it's designed to prove the authenticity and integrity of a message or transaction. So you know what? you ever see where some businesses on their checks, they'll, like at a certain amount, it requires 2 signatures if there's multiple owners? So think of something like that. 2 signatures. So, yeah, if you have a multi-signature wallet and you have a group of individuals or entities that each have their own private keys, rather than actually requiring one single signature to approve a transaction, multi-sig wallets will require at least 2 keys to sign transactions on a network. Now, asset holders often set up multi-sig wallets that require, listen to this, 2, 3, or even 3 to 5 private keys to match before approving a transaction. And listen, if you got that much in crypto, I think I'd probably do it too. If I had that much in crypto with mine and Lance's wallet right now, I think I'd require that too. Got to keep Lance on his toes. You know what I'm saying, people?
I'd probably just prefer that you kept the signatures.
So it'll actually help make that there's no single point of failure and that no single party has full control over the funds. Now, because of this, you have multi-sig custody is a common among centralized platforms. We don't like them. They'll actually have different co-founders overseeing large asset reserves. But imagine a bank vault that requires 3 different keys to open it. Sometimes they actually do have it, though, bank vaults. They have a combination of print and eye scan. It all depends. But 3 of the bank's managers each will hold a key. So like Lance was saying before, like they have multi-sig wallets where there's 2 signatures. So if one person got kidnapped, they can't open it up without the other signature.
Yeah.
So was that, then the kidnappers were like, oh, we need to find a significant other.
Yeah. Yeah. They're going to snatch up the whole family. I mean, it's still tricky because if you lose that one person and nobody else has that information, if you don't have that stored securely, like say in a safety deposit box or a vault somewhere, it's still risky, right? Because if you've got 3 people that have signatures, this is the tricky part about crypto. It's also the secure part about crypto, but it makes it tough, right, George?
It does. Listen, it's for me, I'd rather just have one wallet, one person handling it, and that's it. Something happens, that person's blame me. Because it's in my possession. I can take responsibility. It's not a big deal, but other people can't. Everybody's different. That's why they have all these different things. It's all right. It's no different. But let's say, you know what, Lance? I'm trying to make it simple for people because maybe some people might not understand. So let's say, I don't know, Lance. Imagine you and your friends want to bake a cake. Lance is not really a baker. He does cook though. I have had his food, but you can each have a secret ingredient that you want to contribute, right? You can each place your secret ingredient in a locked box that goes inside your NPC. Now, this NPC, what's it going to do? It's going to act like a magic box that adds ingredients together without anyone seeing what was inside of the boxes. You with me so far? So instead, it only reveals the combined ingredients in the form of the finished, fully baked cake. Meaning when you taste the cake. You ain't going to know what each ingredient is, but you'll know when it tastes that good. Is that simple enough for everybody? Now, I know, Lance, you want to do third-party custody?
Yeah, I mean, look, at the end of the day, all these things matter. But look, third-party custody, that you as a user, you're going to rely on, independently qualified custodians to take control of the private keys associated with your digital assets. And though even though they're not always custodians according to the traditional financial definition, a lot of the platforms like Kraken will fulfill the role of third-party custody when clients choose to keep their assets on the platform. So custodial banks and digital asset managers, financial institutions or other types of third-party custodians that exist in this space. And that space is growing. Let me say that more and more, as everything goes mainstream, more and more are getting involved with this third-party custody idea. Excuse me. However, these services mainly cater to institutional investors. They require more tailored services, or corporate controls, that sort of thing. And of course, to take custody of your private keys, there's lots of benefits and there are some drawbacks. A lot of the new crypto users appreciate the ease of access third-party custody arrangements offer. Of course, that's a lot of responsibility. You don't have to worry about self-custody at this point. That gets removed, which of course is even more responsibility. And you can easily trade and transfer those digital assets between platforms without first transferring for them from a personal crypto wallet. So, of course, these third-party custodians also offer insurance, which, again, depending on the size of the account, I don't know if there's a limitation because, of course, this is relatively new. So the FDIC rules of only so much an account, I'm sure some of that's going to kick in here. But what does that mean? It may mean that you're going to have to be at more than one third-party custodian. But, look, because that third party is the ultimate, manager of your private keys, that custodian effectively controls your coins. In certain instances, they may choose to limit your transactions. They could freeze your funds. They could even block access to your wallet. Potentially international regulation. You have to think about those regulators. They could ask them to take these actions also. So, and if that third party goes bankrupt, well, you know how that works. You might lose all the funds in your wallet, right? Or in your account. So when you start thinking about the real question, I think for everybody is how to choose the right crypto, custody, the one that really works for you. And I think when it comes to that ultimate choice, you have to consider are, of course, security and control versus accessibility and convenience. The more layers of security you have, of course, the less accessible and convenient it's going to be. So you have to ask the question, maybe there's going to be a certain amount you're going to want to have in your trading account, maybe for emergencies, maybe to take action. Let's say Solana or Bitcoin or XRP drops. You don't want any kind of delay. Maybe you want to be able to make a purchase right away because a lot of us are dollar cost averaging. George and I are, putting money into crypto every month. We try to dollar cost average when the opportunities come up. That's how we do it. At the end of the day, you might want to be able to do that. So you might not want to scrape everything into a cold storage as an example. So, I think it really depends on your cryptocurrency goals. There's going to be different custody methods, in my opinion, that are going to be appropriate for certain situations. So I just think you have to actively, for those of us that are actively trading that cryptocurrency, third-party custody may be the most effective option. However, those looking to hodl their crypto for long-term, self-custody still may be the most secure solution. So you're going to have to balance that out. My thing is, when it comes to cryptocurrency, there's no one-size-fits-all. It's just not like that. It's, if you think about any of your financial assets, you're making these decisions for you and your family members all the time. So take your time, learn about it. Number one way to learn is hit that follow button right now. I keep reminding you, but we're getting these massive views on Rumble, and we should be getting lots and lots of new followers. If you love the show, the easiest way to thank us is hit that follow button. If you want to do a paid subscription, $5 a month, it's not a lot. It's a great way to say thank you. We have overhead for these shows, so you can do that. If you like to sponsor this show, if you're one of the big crypto companies, we're probably not going to take a lot of sponsorship from any kind of meme coin stuff. So I don't think you should waste your time with that. But we will take sponsorship from altcoins, big projects, big exchanges, new technology companies involved in the crypto universe. So definitely come on over, check us out, hit it up at info@thebigmig.com or info@solum.global. You can hit us up over there. On the break, take the live link. Tell your friends and family. Come on over if you want to learn about crypto, you want to get top news. You can just have it running in the background. We're also available on every big podcast platform. And we're back on YouTube, baby. Back on the tube. So building up. So if you haven't followed us on YouTube, please do. All right, we'll be right back with George Ballantine, Lance Migliaccio. XRP. Looks like the payment system is surging. This is big news. Stay tuned. We'll be right back on the Crypto Power Hour.
Don't go nowhere.
Are you ready to stand up for your community and support your local sheriff? Join the Constitutional Sheriffs and Peace Officers Association and become a vital member of the Sheriff's Citizens Posse. At CSPOA.org, we empower citizens like you through weekly webinars, arming you with the knowledge to back your constitutional county sheriff. Together, we can uphold our Constitution and ensure liberty and justice for all. Your community needs you now more than ever. Visit CSPOA.org and join the Sheriff's Citizens Posse today. Make a difference. Stand for freedom. That's CSPOA.org. Your country, your fight, your future.
What if you could predict your financial future? And what if you could trade on it? Introducing Block Trust IRA, the future in your hands. An astonishing 88,000 millionaires were created last year from the Bitcoin boom. And you could be next. Block Trust IRA is the only crypto management firm powered by AI-driven strategies, ranked #1 in the world by Bitcoin Magazine. The Block Trust IRA platform is built for everyone, from first-time buyers to seasoned investors. Predictive AI technology that was once only reserved for insiders and elites is now available to you. It's time to leave the old buy and hold strategies behind. Your assets are protected with military-grade security, offline cold storage, and $200 million in insurance. Visit blocktrustira.com to book your free consultation and ask how to claim up to $2,500 in deposit bonuses today. Bitcoin changed the game. AI changes the strategy.
Hi folks, I'm here today to introduce you to the Prepper Bar from PrepperBar.com, the most unique precious metals product we have seen in a long time. These 62-gram bars are perforated and easily broken down into your choice of 3 different sizes to fit a multitude of needs. Whether it be from asset protection from inflation, economic turmoil, or its unique utility for barter and trade, the Prepper Bar makes a perfect gift for all the precious metal lovers out there. Exclusively made here in the USA and selling out fast. Available in both gold and silver, these slim Prepper Bars fit neatly in your wallet, and their utility enables use in any situation.
Forged through rigorous training and honed by the finest instructors on Earth, these canine units serve beside our nation's warriors as they fight to preserve what we cherish. When these warriors complete their duty, the Warrior Dog Foundation provides them with a home deserving of the service they've given us all. At our state-of-the-art kennels, they receive rehabilitation and care suitable for heroes, because that's what they are. Be a part of giving them a future today. Visit warriordogfoundation.org.
All right, welcome back to the Crypto Power Hour, powered by Solem Global. Here with your host, George Ballantine. Lance will be right in. He just had to take a quick emergency phone call. I think he's back. I don't know. He's waving. He's back. But we're going to leave him back there anyway for a few seconds. Why not? But we got the Crypto Mafia in the chat, Crypto Army. So if you're out there watching or listening, if you join the chat, come join the chat. And don't forget to hit the thumbs up button, that like button. Follow us. Matter of fact, subscribe if you can. Every little bit helps. Share this on your social media. Be a baller. Be a Crypto Mafia baller with us. But let me give a shout out to our sponsor, because, you know, Lance and I, we always tell you we got the perfect solution for the people that can't watch their crypto 24/7. I'm talking about BlockTrustIRA.com. They're bringing access to cryptocurrency wealth to everyday people. Their exclusive Animus AI trading platform works 24/7, analyzing market data and executing advanced crypto strategies that go far beyond buy and hold. This sophisticated technology, once reserved only for Wall Street insiders, but guess what? It's now available to you. And it's no surprise, listen to this now, that this system was named #1 crypto technology platform by Bitcoin Magazine out of more than 1,500 global competitors. And our clients are already seeing over 250% returns on their investments, all with military-grade security and up to $200 million in insurance. Your wealth is fully protected. So don't wait. Visit BigMigCrypto.com today and see how you can join this financial revolution. Once again, visit BigMigCrypto.com today and you get up to $2,500 of free crypto. QR code's right here too. All the links are in the chat. It's in the more section under the video. We have it everywhere for you. So when you get a chance, check them out. Because you know what? The banking, traditional banking, all them fees, they're done with. They're going out. Invest your money in crypto. For your retirement, I should say.
I love Animus Technology because those guys have really got it nailed down. I have a lot of respect for what they've done and the number of data sets they use. And that's why it's valuable because, as George said, 24/7, 365. Nobody can watch crypto that often. I mean, unless you've got a bunch of agentic agents doing it for you, and then you can't be guaranteed they're going to make the right decision. All right, let's talk about XRP. Yep, this is not financial advice, but there is a lot going on. And the question is, we've had a lot of bears when it comes to XRP, right? A lot of people that have been down talking XRP. They don't want to acknowledge, XRP's development and growth and the surge in growth. looks like XRP ledger payments have surged over 100% in the last 24 hours. 100%. Think about what that means. If that's not a surge in real, sharp increase in real network usage, and on top of it, the bears better back up. I think they're going to end up holding egg foo young. There's a lot of theories out there about this switch over. And, you know, of course, XRP's price is showing a lot of stabilization. Of course, forming higher lows than it has before, despite remaining below key resistance levels. We still have resistance. There is still people that are shorting and doing their thing. And of course, don't want XRP to be what it's become. Because at the end of the day, if you're paying attention, it has had a high level of acceptance. And a lot of the Bitcoin maxis don't want to hear that. But I'm going to tell you right now, if you're not holding some XRP, not financial advice, I would tell you at these prices, it might make sense just to have a little bit, put it in a cold storage wallet. If you don't think it, keep, you know, hold those seed phrases, keep that private key secure. And maybe you know, in a couple of, maybe another 24 months, you might be thanking George and Lance. But again, always talk to your own financial advisor. Nothing on this show is financial advice. It's educational advice. All right, but the mix is rising on on-chain activity. And of course, selling pressure points to a possible trend shift in XRP. You know, of course, the technical confirmation is still going to require more for sustained recovery. You know, XRP took a hit. But the XRP ledger, of course, notable rise in activity. Of course, XRP's prices have already begun to stabilize after months of downward pressure. And that divergence between, you know, the fundamentals, these improving fundamentals, and I think, and still limited price action is attracting a lot of attention. A lot of people are thinking that this is undervalued. And of course, you know, if you buy Bitcoin at these prices and it goes up 10,000, it only goes up a small percentage, although it goes a lot if you hold the whole entire Bitcoin. Where if you hold XRP at $1.40 or whatever it is right now, $1.38, and it doubles, you just made 100% in comparison. So what I'm basically telling you is the number of payments that have been on the XRP ledger, they doubled. Think about that over a 24-hour period. And that's bigger interaction between accounts. That's more active circulation of liquidity, right, in the ecosystem. It's more institutional acceptance. And there's two, you know, there's always, usually when you see this, it's usually two main factors. You got one, growing adoption, right? Or RWA, real world, you know, usage stuff, real world assets coming on chain for the network. And the other is, of course, speculative capital that's rotating back into assets with established utility. Now, there's no argument by anybody that XRP has a strong utility. Everybody said it. It's hard to argue it because you've seen how many banks have integrated into their system already. You guys know this is going to be the on-chain replacement for Swift. And the ledger, the XRP ledger, is continuing to focus on fast, okay, which speed is number one. And then, of course, low-cost transactions, low fees. And that's the relevance that XRP has in all these cross-border payment discussions for everybody online. So now let me say this, a single spike does not define a lasting trend. It's going to be watching for sustained growth activity. And that's going to be necessary, in my opinion, to confirm a broader recovery phase. So one day, I'm not telling you this is the only answer, but that recent surge, of course, is going to place XRP in a strong position compared to all the other networks with weaker on-chain engagement. So you have to think about that. If we go back to the ISO 20022 tokens, you got to keep in mind that those tokens are integrated into the chain and they have got their place in the system and they're probably not going to be replaced. So ISO 20022 tokens, you got to look them up. It's like XDC, XLM, Cardano. You just go look them up. You go learn about that because it's important for you guys to invest in your education. You go to Google and just type in, tell me everything there is to know about ISO 20022 tokens. That'll help you. All right. But from a technical standpoint, I think XRP, it's traded in a downtrend for months. We've seen it. We know it was up over $3 and then it just kept getting pushed down. A lot of resistance levels, defined by the 50 and 100-day and the 200-day moving averages, just like stocks. And those levels, have consistently limited upward momentum. We always talk about, support and resistance. Now we've got incredible strong support that we may not see a new low from XRP as an example, but we still have resistance. So a lot of those recent price actions suggest a gradual shift. It's no longer setting lower lows. That's probably I don't think we're going to see a lower low than where we're at right now. I think maybe 5 or 10 cents lower, best case or worst case scenario. But that there's an ascending trend here. Now, are we going to see a candlestick? Probably not. We talk about those patterns on the show. I don't see that happening immediately unless there's some major announcement that I'm not aware of. We keep pretty close tabs on Brad Garlinghouse and XRP just for ourselves. But that price structure is tightening, and I think it's going to precede a more decisive move, you know? So I think the selling pressure has definitely weakened, and I think buyers are absorbing supply at progressively higher levels. And of course, there's a big supply of XRP, and a lot of people say, well, that's why there isn't a bunch of value. They had to burn a bunch of tokens. Will they do a token burn? I have no idea, because they've got a prediction for how much utility and how many tokens they need for this global on-chain supply. Whether they think that there's too many, I don't know whether they do or not. That's common in other tokens. It hasn't been common for XRP. So the bearish structure, it's not completely broken. Don't tell me that somehow I'm telling you that the bear trend is over, because, you know, when you see people shorting or pushing on something, and of course the Bitcoin maxis have always tried to discount XRP. So I think, look, we got a transitional phase, stronger on-chain activity. This is simple to see. And I think that creates a much more solid foundation for future growth. And I think of course, we're going to have to see more price confirmation. And that's going to remain essential for us to see whether or not we could give you saying, hey, you better get in now because it's only up from here. So my feeling is talk to your financial advisors, look at those ISO 2002 tokens, look for tokens with utility. And XRP is at the top of the utility food chain, in my opinion. George.
I just want to know one thing. We see XRP making all these big moves, but not the price going up.
That's a valid point, though, George, you're making.
I need your XRP. I need you to go up. Do what you're supposed to be doing. I'm still waiting for all those NDAs that they had when they had their case. What's going on with them? They had like 3,000 of them.
You know, I kind of always wondered, you know, at one point there was discussions that the fine was going to be not taken out of the money that they'd already paid, that they were going to
forget about the fine. The fine's done and over with. I'm talking about all their NDAs.
Is the fine done and over with?
Yes.
Did they actually give them back?
Yes, we spoke about this a bunch of times, Lance. You just keep forgetting.
Huh? Okay.
Yes.
No, I'm not forgetting. I just had not seen confirmation in writing or confirmation from the SEC or otherwise that they refunded the balance of the money that XRP had. So it kind of made me go,
I think, you know what? It's probably they're waiting. I think they're waiting for more like the Clarity Act to pass and get it done with. It's actually, I'm like, I seen that story that we haven't, and it's like, here we go. The banks are trying to get in, man. That's what they're trying to do.
Slippery bastards.
Yep. They're saying what? I'm going to jump to this one, Lance, because this actually affected what? Circle stock? It plunged 18%.
Yeah, man.
Why? Because a new draft of the Clarity Act threatens what? Stable coin rewards. And what essentially it is? You're staking your state. They're trying to stop you from staking stable coins and getting rewards from it, because the banks are going to lose out, because when you put money in a savings account, you get interest. It's not going to equate to what money you can make with staking.
Yeah.
That's what this is all about.
Is bullshit. This shouldn't be happening. The banks should have to be competitive, George.
Yep. I mean, who are the banks
does it surprise you that this is going on?
No, but I mean, look what it did to Circle. 18%, all because they're playing games with this Clarity Act.
Yeah.
I like to know who...
the financial institutions are the ones putting the pressure. And of course, those lobbyists, big bank lobbyists, are pushing on Congress to not pass it in its current state, because they don't want to have to compete at a fair level. They're saying, oh, if that happens, we're not going to be able, we're going to lose, we're going to go out of business. Well, tough shit. Maybe it's time.
They can compete. They just got to change their ways. That's what it is.
You're preaching the choir. I agree with you. But that is a brutal hit Circle took. And they're not the only one. There were other stocks that took a hit because of this.
It's crazy.
So this legislation, what they're talking about here for the audience, George and I are going on, but they would bar rewards on passive stablecoin balances and ban structures economically equivalent to interest, which of course that's a key incentive for staking. Of course, that's a key incentive for acceptance of USDC. So the banks are trying to run their normal monopoly bullshit. They don't want you to get these because the staking rewards in crypto, they're off the chain. George and I do some staking in our one account. It isn't a ton of it because there are some tokens we don't own a ton of, but it pays a little bit every month, goes into our account. But I can tell you, when I say it pays a little bit, if it was in a regular savings account, we wouldn't be getting jack shit. It would be like, It's actually a decent number, 4%, 7%. For the amount of money that's in there, it's a decent per annum return, much better than it would be in a money market. So this is the point. They don't want this to happen. Of course, the sell-off hits Circle, 100% rally since that rally they had. And that's not right. The banks, this is unfair competition restraint, in my opinion.
Yep. I mean, it's gonna take away a lot of purpose for what stablecoin could be for people holding it. And I mean, simply put, it's just not fair if they do this. I mean,
I agree.
At this point, it'd be better to just get a VPN, get exchanged in a different country where maybe they allow staking over there and keep your money there and staking it, right?
It's you're going to have to look for workarounds if they pass this bullshit. You know what I mean? Because think about this. They're trying to restrict whether or not on-chain lending or platform incentives, should, and this is a big part of the pitch to the investor, should even happen. Because you may be able to get low interest loans also. Let's say that you have crypto and that's part of your asset base. You might be able to pull a loan. Let's say you have 50,000 in crypto. You might be able to pull a loan for 100,000 or put a low interest mortgage in. You would use your crypto as security. You wouldn't have to sell your crypto, but the bank would take, not that the bank, the exchange would take it as a, of course, in your loan, it wouldn't be based on prime. It would be based on how that crypto company wants to loan money. So it's possible that you could see 2% mortgages as an example, 1% mortgages, because the crypto companies would have that crypto as a secure asset, which basically you do a forced staking. It would take part of it, but you'd still have growth. They're doing it with Bitcoin already. There's some of this going on with Bitcoin. So I think this is the wrong thing to do. And of course, the Genius Act banned issuers from paying yield directly to users, but they built ways to pass through the income earned on reserves. So of course, Circle collects interest on USDC backing assets and shares it with Coinbase, which in turn rewards the users. So, they're trying to twist the Clarity Act into something that it wasn't, and they want to ban anything economically equivalent to interest. What a bunch of garbage that is. So I would call your senators, congressmen, and just, tell them, we don't want this. We want interest from our accounts. Because there is one thing that and somebody did this numbers on retirement. They talked about secure assets and what you need to have retire. Like $1 million, what does it give you? Imagine that if you put $1 million in a money market, you're going to get 1 or 2%. You're going to get garbage from the bank, right? But you could stake that at 7, 8, 9, 10%. It changes the complete model for even your retirement. So this does not want to go unanswered. And I think the situation, now there's a quote here, Owen Lau, an analyst at Clear Street, said, the actual situation doesn't appear to be as bad as the headline indicates. It looks like an overreaction, but the market tends to shoot first and ask questions later. I don't agree with him because they're trying to pass something that wasn't part of the original idea behind the Clarity Act. They don't want anything that looks like interest. So that means even tokens, anything else that gives you a value higher than their bullshit bank rates and their excessive charges on loans. So call your congressman, tell him, no way, we ain't going for this. Stop dead in your tracks. We want it the way it is. If the banks can't be competitive, then tough shit. See you later, alligator.
Yep. See you later, Lance. We got a jet because we got another thing coming up. We're good as far as time wise. So
okay. All right. Well, listen, guys, we're out of time for today. If you love the show, hit the follow button. If you really love the show, you can do the $5 subscription. It's recurring billing. We appreciate it. If you want to tip us in some crypto, we've got the Rumble crypto wallet. And of course, if you buy Rumble Premium, you can do Rumble Premium with Perplexity. You can subscribe to us. You can throw us a Rumble Rant tip. You can even tip us on thebigmig.com. Great place to go over there. You can throw us a tip in our crypto wallet, or you can just tip us in general. We love you guys. Hit the follow button. Check out solum.global on the web. Check them out, man. Big moves coming up. We can't announce it yet, but there is a big announcement coming up. Let me forewarn you, so you can still get involved at Solum in an early way.
Oh, wait. Do we got Kurt St. John's coming on Friday?
Yes, he is.
Okay, cool.
So the CEO of, one of the founders of Solum Global will be here. Big announcements, guys. Big stuff. So stay tuned for that. Follow G. Ballantine. Follow the Crypto Power Hour. Follow Solum Global and Lance Miliaccio on X. And don't forget, man, if you can do us a favor, follow us on all your podcast platforms at the Crypto Power Hour. We're on all the big ones. And if you're on YouTube, give us a follow there. We're just back on. That we got suspended for some BS. We're back up. Give us a follow, man. Help us grow these accounts. Help us get all the eyeballs on us. All right, love you guys. We'll see you at 11 a.m.
All right, later, guys. We'll see you in a few hours. Peace.
Are you ready to stand up for your community and support your local sheriff? Join the Constitutional Sheriffs and Peace Officers Association and become a vital member of the Sheriff's Citizens Posse. At cspoa.org, we empower citizens like you through weekly webinars, arming you with the knowledge to back your constitutional county sheriff. Together, we can uphold our Constitution and ensure liberty and justice for all. Your community needs you now more than ever. Visit cspoa.org and join the Sheriff's Citizens Posse today. Make a difference. Stand for freedom. That's cspoa.org. Your country, your fight, your future.
What if you could predict your financial future? And what if you could trade on it? Introducing Block Trust IRA, the future in your hands. An astonishing 88,000 millionaires were created last year from the Bitcoin boom, and you could be next. Block Trust IRA is the only crypto management firm powered by AI-driven strategies, ranked #1 in the world by Bitcoin Magazine. The Block Trust IRA platform is built for everyone, from first-time buyers to seasoned investors. Predictive AI technology that was once only reserved for insiders and elites is now available to you. It's time to leave the old buy and hold strategies behind. Your assets are protected with military-grade security, offline cold storage, and $200 million in insurance. Visit blocktrustira.com to book your free consultation and ask how to claim up to $2,500 in deposit bonuses today. Bitcoin changed the game. AI changes the strategy.
Hi folks, I'm here today to introduce you to the Prepper Bar from prepperbar.com, the most unique precious metals product we have seen in a long time. These 62-gram bars are perforated and easily broken down into your choice of 3 different sizes to fit a multitude of needs. Whether it be from asset protection from inflation, economic turmoil, or its unique utility for barter and trade, the Prepper Bar makes a perfect gift for all the precious metal lovers out there. Exclusively made here in the USA and selling out fast. Available in both gold and silver, these slim Prepper Bars fit neatly in your wallet, and their utility enables use in any situation.
Forged through rigorous training and honed by the finest instructors on Earth, these canine units serve beside our nation's warriors as they fight to preserve what we cherish. When these warriors complete their duty, the Warrior Dog Foundation provides them with a home deserving of the service they've given us all. At our state-of-the-art kennels, they receive rehabilitation and care suitable for heroes, because that's what they are. Be a part of giving them a future today. Visit warriordogfoundation.org.